How you doing, guys? Mic check, mic check. Alright, guys. So continuation to the downside. We've got core retail sales coming in about 7 minutes. Unemployment claims. Should start to see something pretty interesting. I mean, with everything that's happened recently, you know, and what we've been looking at, we had these levels on the daily, you know, pretty much marked out the entire time. 11,430, 11,440, these types of levels, and obviously since yesterday we had a really nice run up on CPI numbers, complete reversal, grinding sideways, obviously a sharp drop during the rate announcement, you know, a bit of sideways action, and obviously it's just been bleeding and bleeding and bleeding into sort of pre-market. So again, I am expecting lower prices, around about 130 point drop from here. Ideally, to be honest, during the release, because it's very difficult to take a trade prior to the release, anything can happen. Oh, have I disconnected? Strange. Connected successfully, fantastic. Okay. Not many people on the stream today. I don't know if that's because there's a problem with the stream or if that's just because there's a problem with... I'll say problem, but maybe people are just out and about. Yeah, very strange. Very strange, Don. Just stopped out of nowhere. I just got a message on... I'm using OBS to stream. I mean, at the moment, to be honest, I'm not really that bothered, right? I don't, you know, Jesse, how you doing, man? I'm not really too fussed about people coming to the stream, as in, like, obviously the main people, that's fine, but I mean, you know, to get hundreds and hundreds of viewers, you know, that's going to take a little bit of time. I'm aware of this, you know, I'm not stupid, and that will come with, you know, with just bigger numbers. But going on actually to something that you said yesterday, Don, with this kind of 25% weekly thing, I'm gonna have a really long think about this because, you know, I don't want to stunt the growth of the account, but I also want to do it, right? I don't like saying things and then not doing them. So I'm going to have a bit of a think about that, see what the best approach is, because, you know, I'm not doing this unless I can give some money away. So again, just a very quick overview of what we're expecting, yeah? This entire week we've been expecting, we had levels marked both sides, but I've been expecting them, you know, kind of talking about 11,430. That's the main area, you know, that I want price to be driving towards. You know, and we can see after this extreme reversal from CPI, big run up, now we can clearly say with confidence that this is nothing more than a stop run, right? A liquidity grab. Goes up there, grabs a bunch of liquidity, and then starts to run to the downside, right? And we see the structure of that and how it kind of unfolds on the 4-hour, the hourly. Nice little storyline. So again, core retail sales, unemployment claims, 3 minutes. We'll see what happens. We'll do a 0.20 for now. If it gets really volatile, we'll slow it down. We'll drop it to 0.10, but we're not going over 0.30 lot size until we have a pretty decent account. Let's take you guys over to the crypto chart. Keep an eye on BNB, guys. I don't trust this, like, at all. You know, all we're seeing is just continuation to the downside, and I think we're just going to continue. You know, called 235 before the end of the year. I still believe that that's going to happen. Obviously, it's going to take everything with it, to be fair. So we are very close, very, very close. Core retail sales, Empire State Manufacturing Index, retail sales, unemployment claims, Philly Fed Index. A decent amount of news. Bitcoin's obviously stabilized as well. Look, you see what happened there on Bitcoin? Runs up into this LP. Can't really make this stuff up, can you? Nice little run up there, nice reaction. So we'll see what that brings. 11,655, man, for me. But Binance is on my radar, not to do anything with, but because I'm being very cautious with Binance. I'm really not, you know, happy with the way that Binance is moving. Morning, Brian. One more minute, guys, and rock and roll. And again, I have. Ooh, that looks really nice on the weekly, man. I have the 15-minute chart up of Nasdaq. Okay, so numbers released. What would be really nice is if we clear this high, yeah, really just clear this high. Get back to sort of 625, 630, 640, and then start to reverse. But by the looks of things, it doesn't look like we're even going to get that. Wow. What a muted release. Let me go and take a look at the actual numbers. Yeah, core retail hasn't been released yet, that's why. So I'm gonna leave this for a minute just to see where we fare. My instinct is telling me to short it right now, but I'm just going to wait. .02. All right, Donnie. Thank you. Pretty much hit expectation. ECB press conference in about 15 minutes as well, which, to be fair, if you're trading euro, then just be careful. Yeah, no, that's fine. I understand what you mean, mate. Thank you. 50-point candle on the hourly. About an hour before market open as well, so not really seeing anything anything special. Very muted release, to be honest. Probably start scaling into this. So let me talk quickly about defining stops, right? So you'll notice, I mean, I had a 0.2, I've got 0.2 ready, and I'm like, okay, look, if I short this, yeah, then I can basically just short it as it is and then just put a stop above this, right? You know, 25 points. Fine, you know, $5 or £5 loss, whatever, if we get stopped out. Obviously, there's plenty of downside on this, right? Plenty of downside. But there's also a calmer way to get into this. You know, you grab 10 now, you let it run up a little bit, pretty much the same as what I did yesterday. You know, you've got an average, and then you basically put your stops slightly higher. Morning, Jimmy. How you doing, man? You know, I would feel comfortable shorting this, but again, let's take a look at the 30 for a minute. You see, the 30 looks good. I don't normally use the 30-minute chart that much, but this looks good. Yeah. But this 30-minute candle's literally started 3 minutes ago. All right, so we've already ran up higher. The safer trade would be to take a trade below the 11,550. But again, let's see what the let's see how this 5-minute candle closes, and then what the reaction is after that. I still want to see it a little bit higher, to be honest, because then you're just taking a breakout trade. You know what I mean? So Philly Fed down, okay, 13.8. Okay. All right, so there's your 5-minute. Let's have a little bit of a run up. Again, nothing's changed in the way that we're approaching this, right? We're just watching price. We're just allowing things to just slowly unfold, seeing what the reaction is, you know, down here. We've just come off an impulse to the downside, right? Remember, this is a 5-minute chart, right? So we're not expecting too much, and we certainly aren't going to put too much weight onto this 5-minute chart. But even just a run low is about 17 points, and a break of this low is probably going to push us to around about 25 points if we take a short here and it starts to run a little bit. You know, so the range is not too bad. Plenty of void below, you know, to run towards that sort of 438, which may happen before the end of the week. But again, want to enter safely, right? Tempted. 6 minutes after release, again, very muted. Nothing special so far. I've got a while for this 4-hour candle. So check this out on the 4-hour. This is where I would expect price to want to drive towards, at least down here, you know. So around about 526. There's plenty of range. Just got to see what's a shaking with this 5-minute. Take a look at the hourly. Let me just zoom out a little bit. Yeah, see these lows down here at 517, so it's actually lower, to be fair. This is where we're probably going to end up today. Just there. So yeah, 523, 526, about the same area. That's fine. 3 minutes left of this candle. See, we're not getting any follow through, right? And we know, obviously, with the Nasdaq, it can do this, and then all of a sudden, bang. We saw it yesterday with that trade I took yesterday, right? after FOMC. Just kind of grinding above 50, below 50, spent time, just this very, very minor, subtle shift in flow, and then it starts to drive low, and then bang, it just blipped like 25, 30 points. So we know we see that comfortably, on the Nasdaq. So we're going to go ahead and we're going to grab a short here. It's just starting to accelerate below this low. Again, small size, December. We're not looking to be heroes, all right? Nice and chilled, nice and chilled. With the expectation that we come down to at least 26, right? So that's what I'm expecting on this. I'd be happy with 26. There we go. And obviously I'm sitting here, so there's no manual stop. It's fine. It's a manual stop. There's no, I don't need to put a stop on. I'm disciplined enough to take the trade off if I have to. Not a problem. So a nice, easy start to the day. Simple, effective, not very difficult trade, to be honest. Let me just drop down to the minute just to see the flow. So let's just protect this now. All right, so we've put a stop in, basically at break even, and we'll just let that unfold and do its thing. All right, in the meantime, let me just quickly jump over to I want to check something actually on the pound USD. You can't see the chart, I'm just looking on a different platform. 1 second. Yeah, still grinding. Alright, that's fine. Yeah, we may start getting some acceleration on Binance, to be honest. Okay, so back to the Nasdaq. Alright, strong close on the 5 minute. Not bad, not bad. So we want to see some follow through now on this candle. If the momentum is there, what do we expect to see, right? So when you open a trade, just kind of go through a little bit of an analysis, right? When you open a trade, there's a couple of things that we're looking for, right? Obviously, you can open a trade at any point, like literally at any point throughout the day, especially in these 24-hour markets. You can literally just sit down and just open a long or a short, wherever you feel like it. You could just close your eyes and just click a mouse, right? But we try to find the best possible scenarios. We're trying to increase the odds in our favor. We're trying to get into trades where the probability is it's going to go in our favor. So what do we want to see when we open a trade, right? We want to be opening trades in areas where it makes sense, right? Where we have higher time frame bias, where we have things in our favor, where we have volume, so we're trying to trade around particular trading times where we know there's going to be a lot more volume than there would be, for example, during the Asian session. If you're trying to trade the Euro USD during the Asian session, so something spectacular needs to be happening. Otherwise, it's basically just a dead time, until Frankfurt and then London opens, right? And it's the same with this. So we're trying to focus on trading sessions where we know there's going to be volume, right? We trade around numbers because we know there's going to be volatility in the market. Some people say, no, you shouldn't be trading around numbers, it's dangerous. So shut up, right? We need volatility, we need volume, right? It's about doing it safely. So once we've entered a trade, what do we want to see, right? We want to see price moving in our favor, but that's not enough. More often than not, you'll find that the trades that work are the ones that just go. They just go straight away. They move in the direction that you expect them to, to go in, and the follow through from that is consistent. So we've had 1 5-minute drop, right? Would have been nice to grab it up here, yes, fine, but I wanted to see a little bit more confirmation. And it's very easy to say, man, if we grabbed it up here, we'd be up 50 points, whatever. That's fine, but we need to see a little bit more confirmation, right? 5-minute candle closes, the next candle opens, and it starts to stabilize, right? This is not what we want to see. We don't want to see this. We want to see immediate follow through, right? We want to see acceleration. If you go down to the minute chart, what do we see on the 1 minute chart, right? We see that first initial drop, and then we get a little bit of follow through, and then it starts to stabilize. Yeah, this isn't good. We don't want to see this. Yeah, we want to see progressive moves like this, where it drops and then it drops and it continues to drop and continues to drop, because that's showing us that price is reaching for something. It's reaching for liquidity. It's reaching to pair orders. It's reaching to do whatever it needs to do. And there you go, stopped out, right? So the stop out on this one, let's just do custom period for today. And we're going to talk a little bit about what just happened, right? So it's basically a scratch trade. We're up 10 pence. That's fine. I was happy to to put that at break even, because you can see that the momentum is basically slowing down. So if we just kind of analyze what's just happened, right? Everything about this trade made sense. It should be going in the direction we expect it to go, and it probably will. Yeah. We're probably going to end up down at 526, 523, 520, possibly even lower, and even possibly down to the 500, right? But the problem is it didn't happen now, which means it's not ready to go yet, which means there's other factors that we need to take into consideration. Maybe market open, where a little bit more volume starts to come into the market. Maybe it's just not ready to go, and so on and so on and so on. So we have to take these scratch trades, or take these, reduced risk trades, let them unfold, because they give us the information that we need. The other thing is, I would never open a trade during this time, say on this account, with £2, right? Basically a two lot, right? £2 per point. Even though I'm confident in the trade, even though I know, I would rather still have a little bit of a nibble, do it safely, let the market tell me what it wants to do, let the market tell me whether it's ready or not, which it clearly isn't at the moment. And then we can, assess, readjust, wait for the right time, i.e. 2 o'clock, 2:30, see if the volume starts to pick up, see what we get, and hopefully we get a little bit of a run up to, the most ideal scenario would be if it just rips to the upside, and then really starts to grind lower again. That would be absolutely fantastic, because then you get the impulse to the downside, So again, we've been streaming for about 25 minutes? About 25 minutes? Yeah, we've been streaming for about 25 minutes. We've managed to just have a little bit of a nibble in the market, not really giving us what we want. So we take a step back and we chill, right? And you can see how price is slowing down. You can see that price isn't really trying to accelerate right now. Doesn't mean the trade's invalid. Doesn't mean that it's not going to work. Doesn't mean that it's not going to go to where we expect it to go. It just means it's not ready to go right now. And I don't want to sit through this. Yeah. If I had the full stop at, say, 25 points, I'd still be in this trade. Yeah, great. But I wouldn't feel comfortable with my trader makeup the way that I am as a scalper, being in this trade with the way that price was moving, with almost zero reaction, right, on these numbers, which is very, very surprising. Very surprising. So with that said, while we just kind of sit and watch for a few minutes, is anything anybody wants to go through? Also, don't forget to like the stream, guys. Still feeling the momentum to the downside, to be honest. It's looking good, looking good. You can see it wants to accelerate, but it's just not doing it. Should start to see a little bit of a fall off now. Defending the 40, drop to 38. Strategy on scaling into a trade. Ranges. Ranges are the most important thing. So, if we do this, right? Let's say I sit right now and I'm like, okay, this is the first thing that I see what I'm looking at right now. Haven't engaged. Yeah, so we'll go right from the top. How do I scale into this trade? There's only two things that I can do, right? Mark a level that I expect price to go to, right? So we can see that the hourly is pretty strong. You can see that it wants to go down there. Daily looks absolutely fantastic to the downside. Everything's looking beautiful, right, for a move lower, right? So I can do one of two things. I can either wait for price to hit these levels down here and hit this kind of support level, scoop this liquidity up, right, and take a long, right? That's one scenario. Or I can go with the momentum, with what we're seeing, with what we're seeing on the day, and try and take a short, right? So let's say I want to take a short. How do we approach that? Well, you start with the full daily range, right? And you say, okay, look, that's like 240 points. Yeah, I really do not want to be trading the full 240 point risk. Yeah, meaning getting into a trade right now at 47 and then basically just leaving it and saying, okay, I'm quite happy to have that huge risk because I have 99% confident, right, that price is going to go down to where I expect, right? You can get trades like that, that's fine, but it doesn't really help us, right? There's we also need to take into consideration as well that obviously we're very close to this level. So there's only around about 130 points left to go, about 120 to 130 points left to go, right, before we hit this expected daily level, which means we need to find a tradable range. We need to find something, right, that allows us to trade within that range and doesn't change, so important, doesn't change the structure of this daily momentum to the downside, right? So we've got a really strong momentum to the downside on the daily. Everything looks fantastic, looks like it's going lower. So we go over to the 4-hour chart and we say, all right, look, the expectation is that we are going to end up down at these levels down here, right? We'll just call it 420 roughly, right? So the expectation is that, and this is, we know where price is on the daily, right? So it's a 120 point range to get down to where we expect price is going to go on the daily. So you look at the 4-hour and you say, okay, we've already managed to at least, from where price is, that 240 pip range was about here, right? So if I make a reference to roughly this level here, right? And I say, okay, that's the daily, right? That's the range, massive, massive range, right? So we can break it down and we can say, okay, that's fine. For us to be scaling into this, we want to be at least scaling in. Okay, come on then. Okay, lower range, right? So we say, all right, look, we can see there was a reaction here. We can see that there was a reaction here. This bodied candle right here, yeah, reduces the range for us, right? So we've already reduced the range by about 140 points. So now we have less of a range to play with, because if price does go up and it gets through this, the likelihood that it's going to continue going up to at least this area here is much more likely, right? So some people might say, okay, but how do you know all of that? It's just analysis, and this is what I do, right? So this is the key moment for me. So the process that I go through is I'm trying to identify a tradable range, right, that I'm comfortable trading within and scaling into without changing the structure of this bearish move. So in a nutshell, what I'm really saying is I want to get into this safely within a defined range that, if it's broken or traded through, doesn't change the bearish nature of the Nasdaq. I don't want to be going past a point, right, where if it gets there, we're probably going to go sideways or continue to the upside. That's the point I'm trying to make. There has to be a point where you say, right, I don't want to go past this point. So we do the same again, right? Now this level comes in at around about 636. Okay, so check this out. Let's drop down to the hourly, 626, right? So already we can see on the hourly chart, right, just above this, right, we can say, okay, we don't want this high to be taken. So you start to look at the high of 611 to say 630, so 610 to 630. Roughly that spot above this high, you don't really want price going past that point. If it does, it's just going to make it worse, right? So that's fine. So we start scaling into, and then we start to drop down to the lower time frames, in this case maybe the 15-minute, and we say, okay, 16. So again, we're going on the premise that we're looking at it right now, yeah? How do I get into this? How do I start scaling in? Is the range below still enough for me to take a trade? Yes, right? Is price running up for me to start to scale in? No. So I'm going to start to look at this range. It's about 80 points, and I'm like, okay, maybe I grab, you know, one here, maybe I grab one here, maybe I grab one here. Okay, so I start to scale in. So if price goes up and it hits my first target, I'm going to cancel these orders obviously, but if price starts to go up and it hits my first entry, okay, before it hits the target, Great. So it hits my first entry. We'll see how it stabilizes. Maybe I just get my first entry and it starts to run lower. If it does and it breaks this low, you add another lot. One of the biggest problems with traders, right, is that they're scared to add to positions that are actually in profit. Yeah, they always have this kind of martingale strategy where they're trying to, add to their position to reduce their cost, and basically get a more favorable entry. And that doesn't always work. So in a nutshell, Don, it's about defining ranges. Yeah. So we've already hit that first target at 26. You can see the response from there, right? Let me zoom out. So here's the target. We hit the target. We're getting a little bit of a response from there. About 7 minutes to 2 o'clock. I'm able to take a look at EU and GU. Very quick analysis. Wouldn't touch this unless it breaks this low right here. So unless it breaks 106.05, wouldn't be interested in doing anything with this. I'd want to see it at least past that point just there. 106.15, 106.13, 106.10 on Euro. And then pound is already running, so it's basically filled, it's rebalanced. Yeah, I wouldn't touch this. I wouldn't touch GU. The trade was here during London. 6 AM in the morning, 7 AM. Just here. Pretty easy trade actually, to be fair. 35 pips. I wasn't looking at this, so I've been out and about today. I went to the gym as well, so I've not really had a chance to look at things. Kind of wandering around the house at 4 o'clock this morning, thinking about a whole bunch of stuff. I don't even know what's wrong with me, to be fair, why I do these stupid things, but anyway. So I had the extra hour this morning just to rest. Definitely guilty of not adding to a profitable position. Yeah, man. Yeah. People don't want to do it, right? It's tough. Adding to a winning position is very hard. But once you get used to it, it starts to make more sense. So we've hit the first initial target, 26, right? Starts to run away. Okay, so that's fine. Back up at 45. Very, very boring day today. Man, so muted. Yeah, look at the mess here. Wow. I mean, there's just no momentum. This is the 1 minute chart, right? Zero. Look at this. Look at this. Got the first initial drop. ATR's 12, man. 12 points on the 1 minute. That should be at least 20, at least. 5 minute 15. Very, very, very tight ranges. When you've got markets like this one, you've got to go with the higher time frames. You've got to basically work with the higher time frames, because the ATRs, the average ranges, on these smaller time frames, when they start to sort of thin like this and they become quite small, it's just pointless unless you're really sort of micro scalping, man. It's you need to trade the futures contracts, to be taking advantage of these smaller positions or these smaller movements. Do you do this for a living? How long have you traded for? I don't do it for a living anymore. I've traded for over 26 years. I used to trade for a living. In the early 2000s, I was trading QCOM, predominantly QCOM and a few ETFs. Basically doing 18-hour days. Like I was fixated on, just staring at screens and just getting in and out. Very, very focused trading. So I did that for years, and it just became exhausting, to be honest. It's very, very difficult to trade for a living from home. That was very, very hard, but it was very rewarding at the same time. But I do work from home, yes, and I'm a little bit smarter now. you know, a little bit more mature. My focus is more on building multiple streams of income. So for example, you know, bumping the Patreon. So I've got a Patreon service, right? Trying to get that up, trying to get the YouTube channel making a little bit of money, making money from trading. You know, I've got a cryptocurrency project as well, so I'm trying to get that back up and running, and so on and so on and so on. So I want to have a more sort of even distribution of income coming in, where I don't have to depend solely just on trading, because that's very, very hard, extremely hard. Morning, Serga. US retail sales are in the dumps, and that record-breaking Black Friday, and that includes the record Black Friday and Cyber Monday. Yeah, everything's just a mess at the minute. We're getting zero momentum. So yeah, JB, did I answer your question? Nice one, Mike. Thanks very much, buddy. Have a great day, man. You're welcome, JB. Case is asking about the pound Japanese yen. What are you saying? Running down to 167.70? Yeah, possibly. Let's take a look at the higher time frame. Nice rejection on the hourly. What I don't like about this is this. You can't really see it on your chart. Let me do this. So what I don't like about the pound Japanese yen at the minute is this. The fact that we've basically taken out these lows, right? And sitting on. So the first initial tap, you see this. So if it runs to this low again, it's going straight into this liquidity pool, and it's already tapped into that. Once you get an impulse, it comes down, starts to run up. So you get the secondary pick up there. So primary, secondary, runs, rebalance, drops straight back into this area, takes out these lows. So in my opinion, I think this is going sideways. I wouldn't touch this. The range for me personally, you know, including spread 27 pips, the range, it's just not there. It's just not there for me. I wouldn't touch that, especially on GJ. You're talking, depending on what platform you're on, maybe max three pip spread, 4 pip spread. You don't really want to be trading that, because it takes the, you know, excuse me, it takes a chunk of your range away. Nah, I wouldn't even touch it, mate. I wouldn't touch it, not even for a scalp, not a chance. So 2 o'clock. It's up to you guys, man. Do you want me to run through till market open? I'm quite happy to stay here for another half an hour and see what the market open's saying. Let's jump up to the 15-minute chart. In fact, to be honest, let's go to the 30, just to let's get a little bit more sort of, just kind of slow things down a little bit. Thoughts on DXY? Where will it go? Let's take a look. So 103 at least, yeah. So I think 103, the 103 handle is actually a secondary pull just here. Actually starts at the bottom of that tail, and then the bodies. So you're talking about 102.70 at least. So 103 to 102.70, I think, you know, before we start to see some potential lift, you know, or stability on the US dollar. I think over time, and this is super exag, I actually put a video out on this a very long time ago, but I think the US dollar at some point is probably going to end up around about $85 to $80. See you later, Jimmy. Take care, man. Thanks for stopping by, brother. Yeah, so long term, I think we're going to end up, you know, sort of down at 80, you know, and super extreme, I think the US dollar is going to collapse, to be honest. Up to your schedule. I love these lives. Gotta go. Got about 20 minutes before I jump off. Yeah, sweet, man. I'll hang around. No problem. Good. I'm glad, guys. I'm glad that you guys, you know, are enjoying the process. It's nice, man. I love jumping on. It's great. So potential wick fill. 37 points. Yeah, the only way that the dollar's going to hit 120 is if it's just pure manipulation. Just absolute 100% manipulation, nothing more, nothing less. Yeah, there's no way that it's going to go up there on numbers, on strength, on the strength of the dollar, on the strength of the US economy or anything like that. That's absolutely not going to happen. Yeah, the only way that the US dollar is going to get to 120 is if it is manipulated there. And personally, I think the last shot we had to get up there was the recent one. Came very close, to be honest. Another $6, which is nothing. I mean, it was really, really moving, and a lot of people are taking profits up there, and a lot of institutions basically taking money out of the sort of risk on and putting it into the US dollar because it was very strong at the time, holding their dollars in cash, making the difference, and then obviously took advantage of this this nice run up on the dollar, and then off we go. But again, it's going to require something pretty spectacular for the dollar to get back up to 120. Again, in my opinion, could be wrong, obviously. Could have been a nice scalp on the DXY, on the 15-minute DXY. Yeah, maybe. Not something that I'd personally look into. Say 5 minutes past 2 p.m. Again, very slow, man. Just to give you guys a little bit of a heads up about the way, I think anyway. Yeah, I'm not saying this is the best way, and I'm not saying I'm the best trader in the world or anything stupid like this, but to give you an idea of what goes through my head. Right now, I'm looking at the NASDAQ and I'm like, okay, look, I really want to short this. Like I do, I want to short it because I know it's going lower at some point, right? But I want to do it in a safe way. And right now, what are we seeing, man? We've had that first initial drop on the 30, a secondary drop in, response. So if we drop down to the 15-minute chart, what are we seeing? We can see that price started to accelerate to the downside a little bit. It breaks these lows. It starts to drive towards that, 26 level where we expected price to go. It hits it nicely, just overruns a bit, and now we're starting to kind of come back up a bit. So straight away I'm like, right, okay, is this going to be a reversal? Is price going to start to run up? Is it going to get past 600 again? If it does, what's it going to look like? Blah blah blah. And you go through all of these scenarios, right, to get to the point where it's like, is it really worth engaging right now? Like, why not short this rally? If I wholeheartedly believe that price is going lower, why not just grab it now? Just grab it and just leave it and just let it get there. Yeah? And it's not a rhetorical question. I'm actually asking you guys, why, like, if we genuinely believe that price is going lower, why don't we just short it right now and just leave it? Want to get the best entry? Well, it's down to risk, right? Look at the hourly. We're still within this hourly candle, yeah? So we have the strength of this last hourly candle, which is still there. Still pushing to the downside, right? We've only got a little bit of a relief, from down at these levels. Down at these levels. We expected this, we know that, right? But is it going to hover above this, right, long enough to go straight for it? Because if it goes down there a second time, it's probably just going to go straight through and go straight for the 500, right? So it's not just about best entry, it's about risk. It's about defining risk. It's about checking times, yeah? We're about 23 minutes from the market open where we know there's going to be a lot more volume, right? Which could easily push price higher, yeah? And still maintain this bearish tone. Price could easily run up 70 points. We've been doing this now, what, 4 days? Like, we've seen some massive ranges on the NASDAQ 100, right? We know it moves. So it could easily go up there. Comfortably, you know, do something like this, you know, and then drop like this, you know, and really start to drive lower. That's a very high probability, right? You know, in terms of ranges, in terms of numbers, and in terms of the way that things kind of move around. So right now, it's not the best time to be entering the market. We just unfortunately have to wait for market open, right? And closer to market open, we're going to start to see. Now, the worst possible scenario is that price starts to run lower now, yeah? Because if it does that, it's going to make it very difficult to take a trade today. Because remember, we need enough range. Let's call it a cool 125 point range. So we've got a 125 point range to the level that we are expecting price to go to on the daily chart, right? So that 125 points, what do we want from that 125? Let's say we're looking for 50 points, right? So if price runs up, it opens up that range for us to make it easier to get that 50 points. But there's a cap. There's a point that where price runs up, so it's still valid, still valid, still valid, still valid. But if it gets to 650, it's like, okay, yeah, we're back above the swing high on the, you know, on the hourly. Now we need to see confirmation, right? That 120 is still in play. Do you see what I mean? So these are the things that we have to consistently monitor, go through, query with ourselves to make sure that we're on the right side of things, right? Because there's always going to be a moment on the, you know, on the chart where price will cross over and start going the, you know, in the opposite direction. So like I said, I mean, I'm looking for a short, right? I really want to go short the market, but I just can't do it right now. Hourly looks fantastic. Yeah. Hourly looks really nice to just go. I mean, it's 30 points just there, 35 points just there. Yeah. So we need the 5 minute to stabilize, the 15 minute to stabilize, you know. So we've already had that first initial push just here. We could, for example, take a 25 pip stop or a 25 point stop, grab the entry right here, you know, and then just kind of let it go off the strength of the hourly and expect the hourly to start to form that red body going into these lows. But again, 20 minutes from market open, volumes are going to start to hit the market, easily get stopped out and change absolutely nothing in terms of the bearish momentum to the downside. So we wait, we're patient. In the meantime, let's go over to news of the day. Crypto markets today. US regulation heats up, Bitcoin rises, then falls. Yep, expected. Bitcoin has rallied. What are crypto's true believers still smoking? Alright, let's have a look. Alright, Gates, no worries, man. Since Bitcoin is still a handy barometer for the sentiment of the whole crypto universe, one must assume that more than a few punters saw headlines about one of the biggest frauds in American history. Yes, we are aware of this. Oh wow, okay. As mediums of exchange in the real world of goods and services, none of the digital tokens has achieved liftoff aside from their use in terrorism, financing, tax avoidance and sex trafficking. Okay. So basically what they're saying there is that basically cryptocurrency has only ever been used, right, for, you know, nefarious purposes, which is complete horseshit, obviously. Yeah. Usual crap. BTC booked a Fed-driven pullback. Okay. World's largest crypto exchange, Binance, suspended withdrawals. Yeah, we know all about this one. That's fine. OC Star. Oh, interesting. What's he got to say for himself then? All right. Check this out. OC star and crypto critic Ben McKenzie tells lawmakers that the crypto market is the largest Ponzi scheme in history. So he wrote a book, he testified, Senate Banking Committee, about the fall of FTX. You've got to ask yourself, right, why is this guy talking about cryptocurrency in that way? You know, and right now we're just kind of waiting for things to unfold while we get closer to the market open. But why is this guy? I mean, like, you know, he was in the OC. You know, it was a pretty popular, sort of series. Blah blah blah. Like, what what's he got to do with cryptocurrency, and why is he talking about it? Why is he even testifying in the Senate Banking Committee? You know, what an absolute clown. I mean, is this guy an expert, right? Like, if I had a conversation with this guy and he told me whatever he thinks about cryptocurrency, I wouldn't listen to a single word he says. I'd be like, dude, you're an idiot. You've got absolutely no idea what you're talking about. So you've got to ask yourself, like, why is this person, an actor, somebody who's quite popular, talking about cryptocurrency and saying it's, the largest Ponzi scheme in history? And why is he not making reference to the fact that there are accounting firms, two of the largest accounting firms in the world that are already using blockchain technology, right? So this is the problem. This is the problem, right? Horseshit like this, that people believe and read, and they use these faces to get people suckered into stuff that's completely irrelevant, right? All the while pushing slowly in the background, this smart money, this CBDC idea, right? So you've always got to think about the narrative. You've always got to ask yourself, why on earth, what do these people have to gain by saying the things that they say? I like how Kevin O'Leary, Shark Tank, was trying to blame Binance for the FTX debacle. The guy's an absolute idiot, man. What an absolute clown. You know what I mean? I'll tell you exactly what's going on there, and this is my opinion. Yeah, I'm not alleging this is the case, but this is my opinion, and I'm entitled to my opinion. I think Kevin O'Leary and a lot of these other people, are protecting themselves because they've done things that they don't want people to know about, right? When it comes to cryptocurrency and FTX. And it's exactly why he was arrested. Just to shut him up. Nothing more, nothing less. Yeah. There's a lot going. This whole FTX issue runs a lot deeper than people think it does. BNB hit reverse on Binance News. Da, da, da. Yeah, all right. Just usual crap, basically. Nothing there that's of any interest for us. Let's get back to some 15 minutes. Alright, so I'm liking this 5 minute a little bit more. The 15 minute a little bit more. Still on the strength of this 1 hour. Still looks decent. So we've had that first initial drop. A little bit of a run up. What's the range of this now? So again, we're thinking, right? We're always thinking, always thinking. What if I just grab it short right now? Yeah? Where does that put my risk? At least to the high of this previous 15 minute candle puts me around about 33. So I would have to leave this open, to move around a little bit, to potentially continue going lower, right? Now is 30 points too much? We're talking about a £3 loss, not a big deal, right? So I'd be quite happy to open an entry right here, for example, and then add to the position as price is moving in favor, right? But I wouldn't want to do it the other way around, because there's still the possibility that price runs up on open and takes out this high, gets back above 600 and then reverses. Or it may just continue going higher, we don't know. Just have to be patient. Might see that final acceleration into 500 in a minute. reversing the 5. I don't normally do this, but I want to see something. If price is basically just working this area here at 40 to 45. So the longer it stays in this area, the better, because it just means that basically price is waiting for volume to hit the market so it can start to fulfill orders. Morning, Rob. How you doing, mate? I'm just going to go and grab a drink, guys. 2 minutes. Alright, I'm back. So 9 minutes to market open. Just keep an eye on pre-market movement as well, close to the time. And this is trading, guys. Boring. Take care, Don. Thanks, man. We'll chat, man. We'll chat in the usual places, Discord and whatnot. But yeah, this is trading, man. This is trading. It's boring, but let's kind of think ahead and, let's say we get this account to 5 grand, 10 grand, something pretty meaningful, and we're pulling, a couple of hundred, 300, 400, pounds a week, on multiple trades throughout each day, and we're doing basically maybe 3 hours of actual sort of watching and trading. I think that's pretty reasonable, you know. When you start to get to some serious numbers, you know, if you're sitting on a 50k account, for example, and you're pulling in, you know, 500 to £1,000, you know, a week comfortably with very, very, very small risk. You know, not none of this £1,000 a day, 10 grand a day. Forget that. I'm not saying it's not possible. It absolutely is. But we're talking about realistic expectations. Do you know what I mean? Realistic expectations with a sizable account, 20 grand, 30 grand, 40 grand, something like this. You know, you could comfortably make a grand a week. You know, it's never going to be an exact grand a week. It might be 800 one week. It might be 1200 the next week. You might hit a £500 week, whatever. You know, but the point is, you can comfortably hit these numbers safely, you know, without going completely nuts. You know, and if you want to go full bore and absolutely crazy, you know, you can pull in some you know, much more aggressive numbers, but you have to open up the risk a little bit more. You've got to be around a little bit more. You need more information available to you, you know, so having multiple screens definitely helps, you know, and so on. So the level of commitment that you put into learning to trade and trading the financial markets, yeah, will directly result in the level of compensation that you get. Five minutes to market open. Just going to up the size to 20 for now, just in case I see something really nice. So some things to be mindful of what we've seen so far. You know, we spent a lot of time at the 50 yesterday, right? And look at this, we're spending a lot of time at the 50 again. Yeah. These numbers matter because it, you know, the 50 and the zeros, right? So 600, 650, 700, yeah. 25 is not so much, but these key numbers, 50 and zeros, right? They're important because they're easier to balance, yeah. A lot of these big institutions that have to fulfill orders, you know, brokers and all of this stuff, you know, big banks and so on, you know, they use these round numbers, you know, much more than they would, for example, you know, 48 or 32. Do you see what I mean? Everything's about balancing ledgers. It's always about balancing ledgers and making money, of course, obviously. This song's a bit weird. Let me change this song, guys. Okay, 3 minutes to market open. And just to make you aware as well, on the days that we're not going to be well, on the days there, you know, there aren't any sort of news announcements or news releases of significance, I'll just be streaming 10 minutes before market open, you know, just so we can just capture the open. That's probably the best thing to do. So this is what I want to see. I want to see price move up a little bit, preferably back to 600, and then start to show signs of weakness again. Put us in a much stronger position. Still looking to short, not looking to go long the market unless something spectacular happens. But again, you know, for me, short's the way to go at the minute. Okay, 1 minute to go. You just start to see a little bit of acceleration there just before market open. You see prices just starting to run a bit. Don't want to see price just drop. Go on, run up, run up, run up. How can this market be any weaker, man? Come on. Will you make videos regarding BTC? Yes, I will. There's just nothing to talk about at the moment, Miguel. It's basically flat. Towards the end of the year as well, it's December, things are quite slow. So it's very difficult, you know, to say anything other than what I've already said, you know what I mean? I think first quarter of next year, January, February, March is when we're going to start to see, you know, something significant, I think. No problem, man. Welcome. Wow. How slow is this volume? Can this be any more boring? Come on, run. And just as a side note as well, we're watching this on this platform. If you're watching the futures contracts, it's a lot more volatile than this. You know, just that movement alone, you're talking 35. It's like 140 ticks. Yeah, it's crazy. So I want to see this 5 minute candle reversed, basically, you know. If we clear that level just there, about 48, get back down to 50, that's really what I want to see. Nice, 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 nice. Don't just want to jump into this though, just on that. 3 minutes left of this 5 minute candle, could easily turn green. There we go. So let's just drop down to 10. Okay, let's grab one here at 48. Initial target as well. And again, just taking our time, guys, nice and steady. If we do run, we're probably going to run into the 10, so I'd say at least 510. You should get some follow through on that second 5 minute candle that starts in 3 minutes. We have the strength of this hourly in our favor, so price is looking good. Do we want to be adding to this position? Maybe. I mean, if this really starts to go, 1 second. So where are we at? I mean, we may run past this, so do you know what? Let's just monitor for now. The one thing that's stopping me from adding to this position is the range that we're in, because 4 hour impulse, follow through, really nice follow through, takes out these lows, you know, can get as low as 500. Okay, so that's a real possibility. So let's just move the stop, move the target. Let's put a stop in as well, basically break even, plus 4 points. So nice acceleration. So currently 09, 08. So we would have hit the original target, but I think we're going to at least hit 5s. So pretty decent run. So I'm going to let this unfold. Yeah, I'm actually curious because I've never actually tried to do this, right? Let me see if I can modify order, instant execution. Let me see if I can go down to a 0.05. Can I do this? No, invalid volume. Okay, that's fine. So far so good. We should get some follow through. See what the 1 minute's saying. Nice. Liking the 1 minute as well. Should get some continuation. Comfortable. I'm quite confident we're going to see 500, guys. Maybe a pop straight through this, you know, 90s. So 490, 495, something like that. So very close. Look at this. Very close. Tempted to take this off. 04s, 05s, 04s, 05s. Seeing the 68s. Okay. Nope, still looking good. Still down ticking. That's good. It's 8s on the top end, so we should see that pop. So it's stepping down from 8. Then it was 5, so 05s. So we should see this final push straight through now. Come on. Chop, chop. I haven't got all day. Not aggressively. Like price, buyers aren't aggressively defending this 500 by the looks of things. I think it's going to go straight through this. Boom, done. Nice and easy. So let's go over to our trade. Okay, why is it not letting me drag this? 1 second, guys. It should be. Very strange. It's not letting me do that. All history. Let me change custom period to today. We'll try this again. See if it works. There we go. So nice and easy. Very easy trade, right? I know there's hardly anybody on the stream, guys, but do you understand the trade that I took and why I took this trade, why I waited so patiently, all of the analysis that led up to that point? Nice 50-point move. The actual number that we got from this was literally just shy 59.5 points, you know, on the Nasdaq. Nice and easy. Very easy trade, to be honest. You know, you see the strength of the daily, the strength of the 4 hour, the strength of the hourly, the momentum to the downside, looking for an excuse, you know, to push, you know, and start to take an entry to the downside. We waited for market open, right? So, you know, we took the first initial trade today, okay, up here. So we just dropped down to the 5 minute, to the 1 minute. I have no idea why that's ended up there. That's odd. Sorry guys, 1 second. Let me just repost these 1 sec. Yeah, I don't know why that's up there, to be honest. That's really strange. But the first trade that we took got stopped out, break even, scratch trade. And then obviously the second trade, very comfortable trade, very easy, you know. And this is how trading should be, right? It doesn't mean it's always going to be this easy to get the desired result. But the way in which we approach the market and the analysis that we do and the calm nature in which we're engaging with the market, that should be the way it was today. Calm, relaxed, well thought out, looking for the correct reason, yeah, to enter the market. So now it's defending the 500, yeah. Sweet, nice one. So that's the trade for today. To be honest, if I see something else later in the afternoon, I might grab it. But right now, it's looking like that's pretty much going to be, the end of the day in terms of any trading. Like markets are really starting to thin now, in terms of volumes. So we'll call the live stream there. And what I might do, it's very difficult to actually kind of encompass everything that I've gone through in the live stream today, into a timeline where I put a chapter and say, okay, took the trade here, because I don't just want people to see the trade. I want people to understand why the trade was taken in the first place, But I'll leave you with this. That trade right there, a pound a point, right, was basically £49.50, right? So this is what we're striving for. We're striving to get to the point, right, where we're comfortably using a pound a point, £2 a point, where these very comfortable, very calm trades, are making £50, £100, £200, per trade. And maybe you take 3 trades, you get one scratch trade, you get one losing trade, £25, and then you get a really nice runner for £60 or £70, and you're up on the day. This is what we're kind of working towards. And when we get to these numbers, it's going to change a lot of things, for both the streams and obviously for the account more importantly. So with that said, just a really quick reminder, I'm thinking about this 25% weekly thing, and it affecting, the account. I mentioned this right at the beginning of the stream. Don basically made a mention of this in the Discord, about it affecting the growth of the account, which it will, but, I'm a man of my word and I want to follow through on what I say, so I might adjust it, but I need to kind of figure out how it's all going to work and kind of forward think it a little bit going into next year. But yeah, we'll see how it goes. All right, guys. Hope you have an awesome day. You'll see me in all the usual places. If you need me, I will be either in the Patreon or I will be in the Discords, pretty much all of them, and Telegram, all the usual places. So if anybody needs me, just let me know.